Well, good morning, everybody. We can go ahead and get everybody into the room. We had about 80 people holding there in the waiting room. Let's give them a second to come on in. So good morning and welcome to our program today. What every Bay Area Realtor needs to know to be armed for the rest of 2024. Before we get down to business, a couple of quick housekeeping items. Please make sure that your audio and video are muted. The only people on screen should be the ones we have right now, the presenters and myself. At the bottom of the screen, there is a chat button. If you have a question that you want to pose to the presenters, pop it in there. We keep an eye on it all the time. And if we see that we can sort of get the answer incorporated into one of the responses, we will do so. So feel free to use that chat button. And the inevitable question I get, are we recording? Yes, we are. So we will send you out a link later this afternoon to the recording. Watch for something called a LuxeStream announcement, which will be in your inbox or your spam folder. That'll be this afternoon. That'll take you to the LuxeSF YouTube channel where this event will be posted. Before why today's program, and let me just read a brief note here. For Bay Area Realtors, the first half of 24 has shown improvement over a disappointing 2023. I made an observation that we're currently producing the leading 100 list of top producers in the Bay Area. We've just completed that list for 24 based on 2023 sales, and the drop off in 23 versus 22 is astronomical. So we know there's verification that 23 was not the best of years in the Bay Area. But inventory levels have improved. The Fed is signaling a rate decrease in the remainder of the year. And both buyers and sellers may have grown resigned to the fact that this may be as good as it gets, and hence they'll take some action. So what does it mean for you, the realtor? The third and fourth quarters may define historical trends as buyers and sellers race to beat the clock, or the marketplace may take a turn for the worse. Either way, the astute realtor must be prepared. So we've assembled a panel of the best experts in the business, your managers and your mentors. And we look to them today for some conventional wisdom, some divergent opinion, I hope, and certainly some sound, actionable advice. So be prepared. Let me introduce your mentors and managers in alphabetical order. Amber Allen, who is the Senior Director of Real Estate Operations at Redfin. Steve Bellarmini, who is the president of Corcoran Icon Properties. Robert Brisbane, who is the regional president in Northern California and Tahoe for Engel and Volkers. Georgia Chase, who is VP and director of luxury sales at Chase International in Tahoe. Brian Crane, CEO of Intero Real Estate Services. Paul Griffiths, CEO of Vesta Asset Management. Kevin Patzel, who is the regional vice president for Northern California for Compass. Alan Scarce, who is the regional vice president for California for Coldwell Banker Realty. Todd Mendoza, who's the regional manager for W Real Estate in Napa, Sonoma. Jennifer Supman, who is the senior vice president, general counsel, and designated officer and managing broker of Vanguard Properties. And finally, Zach Webster, who's the assistant brokerage manager at Sotheby's International Realty. Ladies and gentlemen, welcome. It's a pleasure to have you here today joining us. Let's go around the board if we can and sort of get an opinion from each and every one of you as to what has 24 been like and where do you see 24 going and where will it head into 25? Kevin, why don't you kick us off and we'll go around the board, but just a headline opinion from each of you. Kevin, you've got the floor.
Yep, I think you hit on a lot of the points, Alf. Definitely better than last year, that's for sure. And I think today we're very quiet because it's summer vacation, and I think a lot of agents and clients are off. But I'm hearing a lot of reports across the board about inventory coming. I think we'll have a good, robust fall, especially if we have a drop in the interest rates.
Okay. Robert, what about you? What's the Engel and Volkers opinion?
Well, I see a lot of different markets, so I'm going to try and group them all together. I would say the markets are relatively stable. We've gotten used to it. In most areas, you're going to see a lot of similarity statistically from 2024 to 2023. Some areas like Santa Clara County have done great. Marin has done a little bit on the downside, as a couple other counties. But mainly, I think we've adjusted to this market. And so there is a sense of sanity to it amongst our people, and that we know what we're dealing with. We've been dealing with higher interest rates for a while and a restricted inventory. So I think there's an idea of, okay, we understand this market a little bit more, but it's still not what I would call a healthy market.
Georgia, what about the Tahoe perspective?
Yeah, much on the same line, but it's still fairly soft. We do expect a bit of a spike if the interest rates come in September. Interesting, the luxury market is still soft, but we've had we have a $50 million lakefront in escrow, and we've had one of the highest sales of the year at 30 million. So we've kind of got some up and downs with that. So soft, but optimistic that 2025 is going to be strong.
Okay. Paul from Vesta Asset.
Yeah. So just for disclosure, I work in the property management market. My brokerage handles property management and leasing. And so specifically, we're seeing the market stabilizing. There's a whole movement back into San Francisco now for the first time since the pandemic, with people moving back, especially with the strength of AI in the region. And so we're seeing some growing strength within the tech market, meaning people are moving back to the city, and it's strengthening our rental market. So I'm pretty optimistic for the rest of the year.
Okay. Brian?
Kind of the same as a lot of the folks have said. I think the anticipation of lower rates is gonna help the market, and I think when it happens, I think it probably will happen, per the Fed chair's statements earlier in the week, or late last week, I guess that was. I think NASDAQ is going to continue to drive our market here in Santa Clara County, especially, and even up on the peninsula. I think that a lot of the buyers are coming out of some of those tech companies that have been high flyers for many years, and I think that's really a buoy to our overall market. I also see inventory trends up in outer areas, and very tight still in the inner circles. So if you take a circle around NVIDIA, inventory is super low right in around the Santa Clara campus, and as you leave that campus, inventory seems to expand quite a bit. For instance, Morgan Hill inventory is up about 100% from year over year, where it's not up at all in Santa Clara. So I think that you got to follow the money. The money's in the NASDAQ for many of these people, and some of the small businesses that have benefited from the NVIDIA factor. And whatever, 10 years ago it was Google, and the shift has moved from Mountain View down a little further south, and we're seeing quite a robust market in and around Santa Clara County.
Excellent. Steve?
Yeah, I mean, to Robert's point, different. We're all over Northern California, so a little bit different in each marketplace, but in general, definitely we felt like we had a good spring market compared to last year, where I don't know what happened in the spring market last year. And now we've fallen into summer, which is typical for our regions to slow down a little bit. But to everybody's point, inventory is definitely growing in Santa Clara County, San Francisco, Peninsula to an extent. So we're looking forward to hoping that the Fed does reduce some interest rates, and we get into our fall market right after Labor Day, and we're hoping for a bounce there. Although there's a lot of appetite out there. I mean, just talking to agents on a daily basis, there's a lot of buyers going through open houses. There's still multiple offers, and properties going for over asking in most areas right now.
Okay. Todd, what about Napa Sonoma?
Yeah, we're seeing the same thing, just to piggyback on that. But inventory is a little bit, it's growing, and but it all depends on the interest rates, but we're seeing that buyer confidence come back. So more to come. I don't know. We'll see.
Zach?
Yeah, I really agree with all the comments and thoughts on stabilizing. I mean, we forget that the 2021 rocket ship that we were all strapped to, it was, an enormous boon for a lot of our agents, but it doesn't really represent a super healthy, balanced, market that's out there. And so I think we're moving in the right direction. Results are a little bit mixed. I agree with, of course, the seasonality piece of it. The higher end luxury market is still performing pretty well, so happy to see some growth there. But I also agree with what Steve said about the appetite that's out there. I'm of the opinion that the demand to work and live in San Francisco remains high. We've seen a net increase in migration, an increase in tourism, MTA ridership, and all of that stuff. And that demand doesn't just go away. It's sort of, it's sort of earning interest in the background. And I think when the market hits a certain psychological threshold and we get past 6%, let's say, for an interest rate, we get past the election and that sort of thing, I think we're going to see a resurgence in that demand, in that appetite. It's really going to come to fruition. So I remain pretty positive about 2025.
Alan?
Well, compared to 2023, 2024 is remarkable. How's that? And we always have to put things into context where they were. We're coming off of 21, 22, which were the most remarkable years in Northern California real estate. So 23 felt horrific. 24 feels remarkably better. Our issue is that our consumers had to recalibrate their expectations and their capacities based on interest rates during 2023. And as the consumers adjust to what their expectations are, they're capable of coming back into the market, right? So our biggest issue has not been buyers wanting to buy. There's a backload of people who have life changes, who aspire to home ownership. The issue has been sellers being able to find a pathway to sell and onto their next home, partly because of interest rates. So, that's a little bit different twist, but the reality is inventory is up. Our listings taken are up considerably. And so 24 feels pretty remarkable.
Good. Jennifer?
Yeah, Al, I echo what Alan said. The first half of 2024 has overall been remarkably better than 2023. Q2 in 2024, we saw some significant movement and gains. With respect to the balance of 2024, there is certainly pent-up demand, and consumers are adjusting to the new interest rate normal. If you listen to any of the chief economists from Carr and other real estate industries throughout the country, it is really, the onus is on us to educate the consumers with respect to where interest rates are going. This 2.5% to 3% interest rate phenomenon that we saw during COVID, we are likely not going to see again in our lifetime. And while interest rates will adjust moderately in the short term and will continue to trend down over the long term, the only way we get back to a 2.5% to 3% interest rate is if the economy is in dire straits. So that is not a signal of a healthy economy. We do expect interest rates to adjust at least to the mid to low sixes, hopefully by September through the end of the year. Consumers are still playing the short game as opposed to the long game and sitting on the sidelines and waiting for those interest rate adjustments. And we see an uptick in mortgage applications immediately every time those interest rates adjust. So we do expect, with the interest rate adjustments between now and the end of the year, and the pent-up buyer demand and the life events that are forcing sellers to walk away from their 2.5% to 3% interest rates, significant movement in the market for the last half of 2024 and into 2025.
Excellent. Amber?
So I won't repeat what everyone has said, but I will say I'm very optimistic. We have been very bolstered by reverse migration trends post-COVID. We are seeing consumer confidence in the cash and investor sector, anticipating a bump in competition in 2025. That has been very good for our agents, and we expect it to continue the second half of this year. And lastly, I will say there is some articulation on behalf of our consumers in regards to post-election readiness. And so we are seeing that come through in some of our surveys of our consumers.
Jennifer made the point about they're waiting on the sidelines, sitting on the sidelines. I heard the sort of the corollary to that said that the consumer's saying out there right now, this may be as good as it gets. Let's go ahead, damn it, and take some action right now. Where are we on that? Are they waiting for the Fed to do something? Are they waiting for the November election before they pull the lever? Anybody? Go ahead, Alan. Jump in.
Yeah, so there's a concept that I call the law of clarity and the law of confusion, right? And a consumer is confused and they can't act, right? And so, depending where the consumer is, they're confused about what does the election mean to them? Where's interest rates going? Is this the right time for us to move? And when they become clear on what that property looks like in relationship to their own aspirations, they're capable of moving. So the answer is our consumers are across the board, right? Based on where they are personally. And so that's just kind of a perspective on that.
Anybody else? Go ahead, Georgia.
I'd say, for us, somebody else said this, so I'll echo the sentiment. It becomes a new after a while, and people are tired of putting their life on hold. And for us in Northern Nevada, of course, we've got a big demand for those people that are fleeing California for the tax advantages. And so sometimes that will outweigh, the interest rate. Certainly that is affecting many of the median priced buyers, but it would appear that that pent up demand is starting to break open, and they just need to make a lifestyle change.
Zach, you're nodding.
Yeah, it's echoing my thoughts exactly. Just that people seem to be waiting for some kind of critical mass of their peers, their colleagues, their coworkers, the rest of the market to even vocalize that they've accepted this new reality. And once they get there, then it's, oh, okay, well, I had friends who decided to spring for that $2.5 million place in Noe, upgraded from their first time home, wherever it was. I can do that too. And I think not that it's careening towards us, but I do think once we get past that first rate cut and the election, others have mentioned, I think that we're getting closer and closer to a kind of collective understanding and agreement that, okay, this is just how it's going to be. Now let's move forward with the rest of our lives.
Zach, let me put you on the spot. When you're talking to your agents at Sotheby's and you're saying to them, here's the 30-day period when it's going to spring open, when it's going to break apart and they're going to come out, the activity is really going to take off. When would that be? Either in 24 or 25? It's just a prediction.
Yeah, I am truly reluctant to make that kind of prediction. Honestly, I would venture that it would be after the election, just given all of the unknowns, of course, associated with that and how the stock market reacts. I agree that's going to, people's liquidity is going to inform a lot of this as well. What I say to my agents is pipeline. How do you get in front of them so that you are top of mind when the dam breaks, or even if it's just a trickle? The most important thing is not when that comes, but that, putting in those deposits now, making sure that you remain the agent that is first of mind to everyone in your sphere. I mean, that's the best that they can do. Short of giving a prediction, which I can't really make.
Anybody want to make a prediction on that? Or am I putting everybody? Go ahead, Kevin.
Yeah, I just want, something to keep in mind, and it sounds like such realtor speak, but now is really the time to strike. If interest rates do go down and there is a surge in the market, think about pricing. That's going to start to rise as well. So are the people sitting on the sidelines going to wait until the prices are higher, but they have a lower interest rates? It's all kind of balances out. So I think the time now to talk to our clients is, I do think it is now to talk to the clients about buying. There's just no sense of urgency right now. So it's a tough sell to get them off the sidelines.
Todd?
Yeah, I agree. And the one thing that's happening is the finish line for first-time home buyers is being pushed further and further and further. And so how we communicate that now is the time is important for our consumer. So that's what I'm feeling.
Robert?
Yeah, I would say there's a couple of different factors. One is that the psychological side and the idea, is it the right time to buy? And I agree with Kevin was saying, is that if you can afford it, now is what I would say. I would tell someone to buy. I told my son who lives in another state last year, don't buy. I did tell them this year to buy. So, I mean, just last month. So I do believe that now is the time to buy if you can afford it. The issue we also have in a lot of areas, we get beyond some of the really upper end areas, is that there's a real affordability issue for a lot of people because we haven't seen price decreases in accordance with the rate hike. So affordability has never been more difficult, and we have taken buyers out of the market. So we need a little bit of time for those buyers to come back in, but for the people who can't afford it but are unsure or are dancing on that, is this the right time to buy? I would say with interest rates cuts coming, which I do believe they're coming in September, now is the time I would buy. I would buy as much house as I can in this market in a place that is going to be guaranteed appreciation if I could get it.
Gotcha.
And I would just let it ride up because I think we're going to go on a run, honestly, price-wise.
Steve?
Yeah, I don't know who said it, either Alan or Zach, sorry, but in regards to just from the agent's perspective, I think we have a lot of agents on this call here. We have a saying, you know, focus on the activity, not the results. And we say that to the agents all the time. Whatever the election does, whatever the Fed does, whatever the market decides to do, you know, for us, it's still about the agent going out and connecting with their clientele. And, you know, we've told the agents since 2023 that, you know, whatever they did in 2023, it needs to change. And basically, you know, the message is triple up. Whatever you were doing with your sphere or your open houses or your cold calling or your door knocking, to triple up, because I think a lot of us made the same point. The consumer is going to be ready when the consumer wants to be ready, right? When they have to move, they're going to want to move. And the question is, are you the agent top of mind when they're ready to do that?
Paul, we're running out of time already. Let me pose a different question to all of you. I want to go around the board and I want very, very quick answers. Biggest challenge in the balance of 24 and biggest opportunity in the balance of 24. Paul?
I think, you know, just on that last point, I just wanted to mention is like what we're seeing right now in the market is like a stronger bleed between the leasing industry and the sales industry. And I think like that is growing stronger now as people are not able to get their places rented for what they're looking for. I'm seeing a lot more movement of agents in the sales market moving into the leasing area, which I think is an incredible pivot. It means that you can grab onto those clients and hold them through these harder periods. So when it is time to sell, you can pop them back out again. So that's like something really positive that I'm seeing, is that like sales agents are moving with the market and keeping control of their client relationships during this period. You know, I think like moving forwards, I think we'll see more and more of the leasing kind of increase on those properties so they can go back on the sales market and get the sales price they're looking for.
But back to my question, biggest challenge for an agent in the balance of 24. Come back to you. Brian, go ahead.
Yeah, I think the biggest challenge for agents is going to be August 17th and absorbing especially on the buy side and really understanding how that's going to go and really getting a firm grip on their value proposition. And that's what we've been focused on, talking about what value the agents bring to the buy side transaction. And I think interestingly also the listing agents are going to have to tune up their game as well and be prepared to really, quite frankly, defend the idea of a full commission transaction, you know, and attracting the best agents in the marketplace by making that commission piece part of their marketing plan. And I think that that's part of a good listing agent already does that, already goes and talks to their clients about getting the house ready and that kind of thing. And I think that the commission component is going to be a similar piece that they'll have to just get good at talking about, just like most good agents always stage. I think the same thing is going to be most good agents always talk to their clients about the value of a great buyer's agent, bring in a well-qualified buyer that can get to the finish line. And so that's, I think, the biggest challenge. And the best agents are going to be fine, but there's going to be a whole pile of agents that haven't been paying attention, and those are going to get steamrolled, I think. And they'll either get paid zero on transactions because they're not ready for this, or they will just, get a haircut and pay a big tuition bill. So I think that's the challenge, and I think the opportunity, it was said earlier by somebody, is the database is a real opportunity, because I think that people have the luxury right now and going forward, they have the luxury of time, really, with interest rates dropping down a little bit, but prices way high. Relatively speaking, prices, somebody said it also, we never saw any price decline when rates skyrocketed, right? So I think if you believe in the idea of going to equilibrium, I think that there's going to be time. Sellers are going to get a great price for their house whenever they're ready, and quite frankly, buyers even are going to have more opportunities as inventory continues to rise. I think we all have seen inventory bump up. I think that's going to give our buyers an opportunity to take a little deep breath, go in there and negotiate, and get a good buy. But they're only going to do it when they're ready, and they have, I think, time is going to be on their side, both sellers and buyers, as we go into the next market.
To Brian's point about the August date, what are you specifically telling what are you specifically telling your agents in terms of how to be prepared for that switch? And I understand the platitude about the agent has to provide more benefit. Yes, we know that. But what are the specifics? What specific advice are you giving to your agents? Somebody.
Oh, I'll go.
Who was that?
Robert.
Go ahead, Robert.
Yeah. Well, first off, starting next week, we got to learn some new forms. I mean, there is a huge difference on us knowing how to explain what we're putting down on paper. These forms are a lot different. We have a different way of getting compensated. We have a different way of explaining forms. There's a learning curve that is extreme right now for a lot of agents, and they are. So I believe what agents need to really rely on first is the attitude that they are smart enough and nimble enough to make this work. And in a crowded marketplace, there's always room for excellence. And so if you keep your attitude high and you decide that you are enough, because I believe some people, what you never want to see as a manager, people go, oh, I don't like this. I don't like this. I like the way it used to be. Well, the way it used to be doesn't happen anymore. It's gone. So we're dealing in reality right now. And this is a huge shakeup, and it's going to be actually fun to see how we adjust to it.
Alan, go ahead.
Yeah, I'm going to agree with Robert. I mean, we had a couple of things. I'm actually less concerned about the forms because they're going to continue to change, right? I mean, I think we're going to see a change last week. We'll see the next change. What I'm concerned about is the agents having the mindset and the confidence to have the conversations they need to have with their clients, right? And to guide them through the process. Sellers want to sell, buyers want to sell. We just need to help them guide through that process as we go forward to it. There are some basic conversations we have to have about how we're having about how we get compensated and what our value is. The forms aren't the issue; it's the conversation. So I'm focusing really on the mindset of the agents and their confidence of having great buyer consultations, great seller interviews to prepare them for the changing market. And going back to the previous question, the opportunity is for the agents who work. If an agent's sitting here waiting to figure it out, they're going to keep waiting because it's going to keep changing, right? The ones who take action today and engage with their clients and their consumers are going to win because they're out in the arena, right? And so it's mindset.
Amber, you're on mute.
I would just say that this is the era for the best agents. This is absolutely the best time for our professional agents to go out, show their value. This is the time of extreme negotiation. We're negotiating on all fronts. Be prepared for that. Go in with confidence. And lastly, as a brokerage, coming behind our agents and enabling them with technology in order to inform the consumer. All of those things. We rolled out agency agreements. It was a requirement in Washington State, January 1. It's coming in our new forms in California. Enabling our agents to go out with confidence is going to be key. This is going to become, gone are the days of new agents breaking in without a lot of coaching and mentorship. Teams are coming in to play, at least at my brokerage, in a new way, in a new dynamic because of the changes in the industry.
Any other comments on this NAR? Go ahead, Georgia.
Just say, to reiterate what Amber said, as a brokerage, we've elevated the training, our marketing materials, our buyer's guide. We do weekly calls to make sure the agents, have that place to just voice their concerns and build their confidence up. But it's a lot of training, and absolutely the agents that are willing to work and dig in are the ones that are going to continue to excel. It's the time to show your value. And, we've implemented a lot of the changes months ago. So we're, before the actual August 17th date, requiring everybody to, get the buyer's agreement. And we're just going to keep up with all that.
Alf,
Zach,
I would like to make one point here,
please.
The elimination of the cooperating compensation structure, which was announced by Carr last Wednesday evening. That is a huge sea change for the industry, and nobody can doubt that. But what it does do is it facilitates transparency and agents going inward and learning how to communicate their value and what their value proposition is. This concept that a buyer's agent who is a fiduciary to their principal in a transaction should work for free or should work for something less than the listing agent. It is now, the onus is on the agent to articulate their value proposition. And while there will be a learning curve in that, I think it's going to be for the best. The transparency, the consumer transparency is for the best. Agents are going to really understand and have to dig deep with respect to the services and the value that they provide their buyers. And here we have been, we rolled out what we thought the practice changes would be back in January. Now we have a sea change as of last Wednesday with the release of the new CAR forms. But it's all about education, and it's all about spending time with the agents so that they feel comfortable and confident articulating what it is that they have to offer in this new marketplace. And while it will cause some short-term stress, I think it will long-term be beneficial for everybody involved.
Jennifer, let me put you on the spot. Generic question. I'm an agent at Vanguard. What would be the top 3 headlines of my personal value proposition in that transaction? What would they be? Just give me the headlines.
Sure. And that's on the buyer side, I presume?
Yes.
Well, what's interesting, and I'm going to bring a little bit of my legal knowledge and background into this. In a transaction, the buyer's agent is holding the biggest bag of responsibility. The fiduciary duty that the buyer's agent owes to the buyer is to counsel and advise the buyer with respect to the red flags that exist with respect to the subject property that are gleaned from the transaction file. And once the buyer's agent identifies those red flags, then the buyer's agent has to present them to the buyer and counsel and advise the buyer with respect to those issues and the implications of those issues on the buyer if they proceed with the purchase, to determine whether the property is suitable for the buyer's needs and wants. And that is when something goes wrong in a transaction and then there's a claim after escrow close, it's the buyer's agent who is holding the biggest bag of liability because they have the most responsibility in the transaction, and that is worth a lot.
So what are the 3 key points of my value proposition as a Vanguard agent in that transaction?
Sure. It's security, protection, advice, and counsel.
Thank you. Zach, you had your hand up.
And I couldn't have said it better, Jennifer. I think that was an excellent answer. And I also come at this from a former attorney perspective. And I think the concept of the fiduciary duty isn't even being spoken enough in this sea change that's happening. But the gravity of being a fiduciary duty is an enormous opportunity to talk about what you are going to do for your clients. And back to your question, Alf, I mean, the challenge is the opportunity. It's almost an opportunity for agents to reintroduce themselves to agents about what this process is, the soup to nuts of what they're going to do for the clients, and to get them in privity of contract. We're now going to be locked into a document it might reinvigorate them. It might get all of these sideliners who we talked about in the last question, who are waiting to either list or buy, to come back into the fold and really see you in a new light. That I honestly believe that the opportunity to re-articulate the exposure and the liability, you know, and how we're going to cover that as buyers agents is an enormous chance to really talk about, you know, how complicated this job is, how comprehensive it is to review the myriad disclosures and all of the tenant landlord stuff in San Francisco, TICs versus co-ops. I mean, you name it. It is an incredible amount of work and value add. Now we can talk about it. Have we
To the table,
a reason to talk about it? Yeah.
To the table, quick question. Is this a seminal moment in real estate in the Bay Area? Is it possible that there will be agents who will be flushed out to sea as a result of this change, Brian?
I don't think there's any question. I think there's a lot of agents that have come into our industry and think of a listing as a lottery ticket to a decent paycheck. And I just think that's we've all seen it. We've all seen agents come in, write an offer, fax it in, or, you know, email it in, and then not even call the listing agent and ask them anything. We had one where we had the listing and the buyer came in from out of area on an $8 million listing, and our agent, one of the top agents, was offering 0 and with private remark comments to the fact that he's willing to pay a fee, but the agent from out of area never looked at it and never noticed it was 0, never noticed the private remarks about commission, and wrote an offer, and that agent didn't get paid on an $8 million transaction because the transaction got done without any talk about commission. And so anyway, I think that's going to be very, very common in the next 90 days. And I think that everybody will pay their tuition by then, and then we'll be back to this new normal. But I think there will be, in the process, a lot of folks are, as Zach was saying, this idea that we're a fiduciary is lost on a lot of agents, and they really don't take it seriously. And I think it's going to, overall, in the long run, I think it's the best agents are going to win, and they're going to, the cream is going to rise to the top, and those people are going to absolutely crush it because they understand the magnitude of the work they're doing, and they, you know, brokers won't be able to afford to hire people that are clueless. And I think Amber mentioned that, you know, the idea that mentorship is going to be an absolute critical component. There's no way you can hire a new agent without locking them into a mentorship agreement. And if they don't want to do it, then go to another brokerage. But we're not, you know, it doesn't make any sense for us to bring you on. And so those are some thoughts I have about it.
Let me switch. We've got 20 minutes remaining, and I've got so much more to cover. Let me switch hats for a moment. I just want to get a confirmation. Inventory levels are up. Yes? Can I just see show of heads? Fine. Are we seeing a surge? Can I use the term surge, a surge in listings?
I disagree.
Robert,
that inventory levels are up.
I would say happiness is a low base, and last year was a low base, and so we have a surge, but I don't think we're in any kind of crazy high inventory environment. I think it's just kind of returned to somewhat normal inventory levels for this time of year.
And Robert, what were you going to say?
Seeing normal seasonality, right?
Yeah, I would also say, yeah, it's summertime too.
Alan, sorry, I had all of you talking at the one time. Alan, what was the summation there?
I was going to say, we're seeing seasonality, right? We're seeing some normal seasonality coming to the marketplace. We felt like we had a surge of listings that came on in the spring, which is fairly traditional. And we're hitting summer, and the new listings coming on over the last several weeks have been significantly down from what we saw in, you know, April and May. So, but compared to 23, you know, up over 20% compared to what we were the previous year. So,
well,
Robert,
Alf, I think you have to, different counties have different results on this question. Okay. So you're going to see things, I'm going off of memory and by classes. In San Francisco, I believe we're still in a low inventory state. Am I correct, Zach, on that? Right? The single family residence, low inventory.
I think
in Marin, it's almost exactly the same year over year and from 2 years ago. Santa Clara County, I believe, is down in inventory year over year, which is really added to it. Then you look at Contra Costa County, which is significantly up in inventory. So I think you have to look at the different areas, and then in where W is, I think you're seeing an increase in inventory up there. So you have different marketplaces, and which is why I think if you go take a look further at those stats, there are certain areas in Taro's area where, I mean, Sereno Group's in Taro's area where you're just seeing, you know, Santa Clara with very tight inventory, and it's really keeping those prices much higher and not stable. So there's different areas impacts.
But vis-a-vis 22, we have seen some increase in listings and in.
No, I'm disagreeing on that. I'm saying no in a lot of areas. Some areas, yes, but some areas, no. Nationally, yes. That's my opinion. That's what I'm seeing out there. But
let me take two specific markets. The luxury market, I want to go with a sort of a $10 million and above. What's happening to that marketplace right now? Anybody?
Tahoe, we've had an uptick. It's still soft, but definitely had an uptick. There's been some big, like I mentioned when I started, you know, some big premier properties that have gone into escrow. I'm in a gated community here, and we've had multiple sales in the, you know, 10 and over in this area. Again, those buyers that want to get the residency and be here and are just happy to find a brand new constructed home. So.
Ryan, what about, yes, go ahead, Jennifer.
Oh, I was just going to say in San Francisco, what's interesting, in the over $10 million mark, we've had 8 sales in the first 2 quarters of 2024, whereas in 2023, there were 5 total across the calendar year. So we are up.
Let me stay with you. What about high-rise condos? Stay inside San Francisco. What's the status of that marketplace right now?
It is very slow and there's very low demand.
Paul, would you agree with that?
I would. So speaking from a leasing perspective, because we do leasing and management, you know, our downtown market is still very, very muted. We're seeing some movement or some expectation that there'll be higher demand coming in the fall with more movement back into the office, but it's very slow moving there. On our luxury side, meaning like rentals that are 20K plus a month, when they're coming up, they're getting leased much more quickly than usual. I'm finding that like our typical lease timing for the luxury side is usually about like a month to get them rented, versus now they're getting snapped up within a couple of weeks. And we attribute that back to, you know, AI and a movement back into bringing executives back into that tech space again. So we're seeing like positive movement on the luxury rental side.
What about foreign investment? What about foreign buyers? Are they coming back? Are we seeing anything noticeable there? Anybody?
Not in our area.
Nothing there.
We have seen some foreign investors start to trickle back, primarily from mainland China. The situation is typically they have a child who resides in San Francisco, and they want to own a home here to be close to their children and or grandchildren. So we are starting to see movement back into this market.
Kevin, you were going to say something?
No, well, certainly the Russian buyers that's been cut off, right? So, and I think China to a certain extent, yes, they're still coming in for investments, but I think that they're having their own economic issues there. So that, I don't know if that's going to be that solid for the long term, but you know, we're hopeful, obviously.
Alan, did you have a comment? Did you say something?
I didn't, but I'm going to say it's kind of a mixed bag, right? Far less in terms of just vast investment coming in right now. We're continuing to see investment but it's more lifestyle oriented than it was just pure driving investment that we saw earlier.
Got it. We've got 15 minutes left here. I want to get into the agent and sort of understand the agent mentality and behavior here. Sort of COVID was the tectonic shift in the business. Coming out of COVID, was there any long-term impact or effect upon agent behavior that has forever been changed? Amber, you're nodding.
Yeah, I'll just say, you know, we've got a unique brokerage where our agents are in part receiving leads off of our website. And so in COVID, there was this concept of like, let the fish jump in my boat. Those days are gone for Redfin agents. I think for many agents, even if they were buying those leads, that those days are gone. So you see the agents needing to move to be very relational. That doesn't mean they don't have to be good at in the transaction, but they have to lean into that side of their business. Agents in my brokerage, many of whom have very large pipelines, need to leverage that today in new ways. They have to prove their value. We've said that time and time again up front. What does that look like in the field? You'll see agents take far fewer customers off the website, but invest more deeply in those consumers up front in order to get the close rates that they need. And so I think that's a very healthy move in a positive direction for agents, not just at Redfin, but other agents that rely on web leads as a source. I will also say there is a shift in consumer behavior where those conversations we're seeing in Washington State around agency upfront have really benefited us as a company, because it forces our agents to have that conversation early and not get lazy about it. Quite honestly, they've got to have the same conversation our competitors are having much earlier. So I think that's a really positive shift for our brokerage.
Let me go around the room and ask everybody for an opinion on this, but briefly, because we're running out of time. Jennifer, start with you. Long-term shift in agent performance behavior?
As a result of COVID?
As a result of COVID?
We haven't seen it here. You know, our offices have always had an in-office environment. All of our executive teams, our agents are in all of our offices almost every day. And so we really haven't seen anything by way of a shift.
Steve? You're on mute.
Yeah, I got that. Sorry. Yeah, I mean, I would say for us, I mean, initially it was a little bit tough getting agents back to the office and getting engaged with the office environment and training, but that's pretty much changed over 2024. And I mean, our big thing is agent services at the office level. And I think agents are starting to come back, you know, prior to COVID. So it's been good for us.
Zach, long-term shift?
I would say that it not much in terms of substantive what they're doing and what they're taking advantage of. And I agree with the prior comments. They're still leveraging the, you know, the resources that our managing broker is also an attorney, you know, that we have in terms of that field of expertise, marketing and all the rest. It's a matter, like all the rest of the population, half of them have just decided that they're just as productive from home as they are in the office. So I think that natural trend was going to happen, but their engagement level still seems to be the same as it was pre-COVID. So I guess I'm almost not sure how to answer that question. Their behavior is changing, but only insofar that they're doing some of it remotely. They're still engaged in terms of the office.
Alan?
Yeah, so
Briefly.
there's definitely been a change in behavior, but you know, our offices serve as a hub for engagement, training, and services, and people come into those. What has changed is the number of agents who would sit in a desk for a prolonged period of time working out of their office. They work from home, they work remotely. We have far less need for physical space than we had prior to COVID. We need more space for actual engagement, open dialogue, and that's where they're getting great value in coming into the offices. But you know, what's missing is the day-to-day banter that agents used to get, particularly new agents, and hearing top agents talking about transactions, being in the, you know, the office and the cubicle next to them, because they're just not there as frequently in that type of engagement.
All right. Brian?
Yeah, I mean, I think as a brokerage, we have to think it differently, and you know, people aren't coming in, and to try to tell them to come in, it would be opposite of why they got into the business in the first place. Most of the agents left the corporate world because they didn't want to be told what to do, and we have a lot of independence in our agent pool. And so to try to tell them that they have to show up now, so the key is they're going to need to want to show up. So what we're focused on is events at the office, a lot of social, relatively social events. If we can tie that to an educational component, you know, that's good too. We also have moved toward trying to differentiate our agents, trying to help them differentiate themselves from others in the marketplace, and really be a one-stop shop for all of the client questions, including anything to do with real estate. So by partnering with a variety of different companies in our in our orbit, our agents are then able to be a part of conversations that they wouldn't normally be a part of. So that's kind of what we're focused on.
Kevin, different question to you. All of the Compass agents under your purview, if there was one piece of new technology that you would want them to use and implement, it would be what? One word answers here, please, or close to it.
I would say their database, CRM, like just really getting in touch with that. But I did want to say one thing to the other point.
Please.
I really want to stress the face-to-face for agents with their clients. I think we've gone away from that, and I think a lot of agents are just coming out of that, hosting client parties or meeting people for coffee or lunches. And I think that that's been really a difficult transition, but so important to have that face-to-face, eye-to-eye contact.
Todd, one piece of technology you want the W agents to have?
Continue with their CRM, staying in contact with their clients. I mean, people say they want the best, software, but they just have to use it. And that's the challenge in
Amber?
Yeah, I will say CRM and AI.
And you're implementing AI within the system, within the network.
That's true. So, and I will just tie that into, you need to know where your funnel of business is weak and lean into business planning, and software should enable that.
Yeah. Robert?
I can't really think of anything that is significant that is right now out there, quite honestly, except for CRM, of course, is the most important thing, but it is the attitude and the willingness of the agent to use the technology that I find is the biggest impediment. It is not the lack of technology, it's the lack of use by people who are fiercely independent and people which are we call them advisors. And so I think the biggest, all the tools are out there, is my opinion. I don't really see anything that really needs to come into the market except education and motivation for our agents.
Georgia?
Absolutely. CRM is great, but they have to do something with it, connecting with the people, drip campaigns, marketing more consistently, and definitely AI has certainly elevated a lot of property descriptions and things like that. So I think both of those are key.
Brian, any technology you want Intero agents to use?
Well, I just reiterate that the gold is in the database, the people that know us, like us, and trust us. We got to continue to grow that, and the best way to do that is via CRM. And if people don't like that, then they pick up their phone and go into the directory and just start calling and connecting to people, because there's a lot of misinformation about what's happening August 17th, and people want to know. And I think we have to encourage our agents to reach out and voluntarily educate their clients as to what's happening.
Proactively. Alan?
Yeah, well, I always say the best CRM is the CRM that somebody uses, right? In addition to that, though, we're very much into relationship and efficiencies. So any software that helps you do a activity in a more efficient manner and be able to communicate to your clients in a more clear and transparent fashion is beneficial. We're leaning heavily into software and services that affect our ability to continue to support our listing agents.
Zach?
I think the end result is really the most important piece here. The level of service, the level of knowledge and competency. Lean into whatever tools that you have that bring you to that place so you can demonstrate and educate your own clients, and you, again, using this moment with the new forms and the new rules as a way to say, here is the level of service I'm going to give to you. I think that is far more important than an AI tool, even that will facilitate a CRM. It's all, a means to get to that end.
Steve?
Yeah, I mean, obviously CRM, but also, what do you get out of the use of your CRM? It needs to turn into voice to voice and face to face conversations. And I think a lot of agents are trying to do a lot of communication via written communication and kind of leaving the personal contact behind. So as long as you're using your CRM to accomplish that, I think the agents will be ahead of the game.
And Jennifer, final word on this?
Sure. Real estate is a relationship business. Let's not forget that, right? It's not a technology business, although there is some great technology out there. It's about relationships. And so any any product that allows an agent or helps an agent facilitate connection with the people who are looking to feel safe and cared for and protected in a transaction is something that we support.
Okay. Two final questions. We're going to go around the board on this. We're running out of time. If there was one piece of advice, we have 160 plus 170 agents on the call today. If there was one piece of advice that you, and more, by the way, who'll watch this, another couple of hundred will watch this on YouTube. What singular piece of advice would you want agents to walk away with today from this discussion in terms of how they should behave for the balance of the year going into 25? Start with you, Georgia.
Embrace the changes, elevate yourself, take advantage of your brokerage's amazing trainings and all your resources that you have, and be fearless.
Robert?
Be fearless. The mindset of being nimble and using your intelligence and knowing that you're enough. And then as far as activity, I call everyone who I know and I let them know that I am in the business of selling real estate by the end of the year.
Amber?
I would say mindset. And the second thing I would say is this is a time to remain flexible and come to the consumer with a complete solution.
Todd?
Know your craft and confidence, and convey that confidence to your client.
Confidence, trust. Confidence, trust, both?
Yep.
Kevin?
All of that, but just pay attention to the changes and how you can up your game, because it's going to be increasingly important that you know your stuff.
It's going to be a tough environment, is it not, after the 17th? Kevin?
I think we can get by it, get through it. I think the majority will, but it could be tough for those not paying attention and not embracing the changes.
Brian?
Yeah, I mean, I think that everybody said it, change is always a good opportunity. And I think that, there's going to be a lot of people that are just not going to be on the game. And so there's a great opportunity to take market share from those folks. They're not prepared. They've been on vacation for a month or 2 or 3. And those agents that do 3 to 5 transactions, or I should say 2 to 4 or 5 transactions. I mean, some of them haven't done one in a while. They probably haven't checked their email in a while. That group is going to be in trouble. So there's great opportunity for agents that just get all over this and get excited about it. And I think really bringing that enthusiasm. The business of buying and selling real estate is exciting and fun. And I think COVID, I don't know, it seems like we got away from exciting and fun. And I think we got to get back to exciting and fun. And I think if agents bring that enthusiasm, it's going to be noticeable out at open houses and that kind of thing. So those are the things I think about.
Alan? Advice?
Be engaged. Everybody else has said it, but be engaged. This is not a time to sit on the sidelines. It's a time to be confident, be engaged, and be focused on your clients and delivering them an extraordinary level of service. That's what's going to differentiate those who win and don't win is, how well they effectively work with their clients. So be good.
Zach?
On a practical level, educate yourself so that you can educate your clients, and ditto to everything anyone said. But besides that as well, don't forget that you're not doing this by yourself. You have your brokerage resources, but you also have your other agents, your peers, your cohorts. Work with them, collaborate with them, practice with them. I think that, holding the line on, whatever level of commission you might think is appropriate for your business. You're not in a silo. Take advantage of that and leverage it.
Steve?
Yeah, I would just say be proactive in everything that you're doing right now. Don't sit back. Go out there and educate yourself and really become the knowledge broker for your clientele.
And start now. And Jennifer?
Educate yourself, be confident in yourself, and be open and flexible.
Jennifer, this is a selfish question for me. Going to start with you, go around the board quickly. I cut you a check for $4 million right now. You have to spend that money as a personal investment for yourself on residential real estate, preferably in the Bay Area, but anywhere in the country. Where would you buy today?
Well, personally, I would like to invest that in a house on the coast in Sea Ranch. But if we're thinking about a return on investment, South Bay.
South Bay. Steve?
Yeah, I mean, if it's just for personal, I would say probably somewhere in an island in Hawaii somewhere.
Zach?
I'd get a multifamily unit, 2 or 3 units, somewhere in the southern part of District 5 even. I think there's going to be a lot of growth there. And I think multifamily units there are a lot of deals that you can get for 4 million. Absolutely.
Ellen?
So many gray areas in our marketplace, but the key is just being in. I think you could almost pick any of our communities we represent, buy a house, let its equity continue to grow. Safe bet in real estate, almost any place we look.
Brian?
Well, I'm a fan of the I-80 corridor from San Francisco to Reno, and multifamily. If I was going to be investing $4 million, I'd look to deploy it that way.
Kevin?
Just a tiny little house in the wine country. That's it.
Todd?
Same. I love where I live, and if I had an investment, it'd be near where I live.
Amber?
I'm looking at Mountain House with the Valley Link project, and then I am a fan of any waterfront on the Puget Sound in Washington State.
Robert?
If I had 4 million and I wanted to have the best chance of making an appreciation, I would go into the flat part of Los Altos, buy as much house as I could, where either it's a rancher or the bedrooms are on the same floor. The school districts are too amazing. There's too little inventory. The appreciation is not going to stop. I just think it's the safest, best investment that you can make right now.
Georgia?
Reno outlying areas of Reno, multifamily, huge growth going on that we have here. If it was commercial, downtown San Francisco.
And Paul, final?
Yep, I would go multifamily housing in Noe Valley along the Divisadero corridor and anywhere in Pack Heights.
Presenters, thank you very, very much for today. I got through half the questions. We could have gone on for another couple of hours. I'm sorry about that, but you all had great information for the folks who were tuned in today. So I want to thank you for being so gracious with your time and being so generous with your time as well. Reminder to our audience that there will be a Zoom link coming out. There'll be a recording link coming out this afternoon. Look for LuxeStream in your inbox or your spam folder. And a quick reminder that on the 25th of this month, next week, as a matter of fact, we'll have a program on a personal real estate audit and succession planning program for realtors as well. So keep an eye on for that announcement coming out. So panelists, with that, presenters, thank you. Let's make some money. Let's sell some real estate. Ciao.
Thanks for making this happen, Al.
It's a pleasure. Always a pleasure. Thank you.